All right. Next question is Raz. Do you ever trade on gut feelings or do you always use data-driven approaches?
Ooh, good
Nick, you want to
question.
start?
Yeah. So there's actually a book called Trading from Your Gut, and I read it a while ago, and it talks about this. And there is when you get more experience in the markets, there is a gut feeling sensation that kind of comes to you at certain times when you see certain types of price action or certain types of setups, and you kind of get that gut feeling like maybe, the sentiment is going in your favor. And I have made decisions based on somewhat of a gut feeling. I use sentiment a lot. Like the Wall Street bet stuff is, a perfect example. I'm using, trends a lot. I'm trying to figure out, what's popular, what's growing in popularity, whatever. And I guess that is a bit data driven if you're kind of doing that. But at the same time, sometimes sentiment is absolutely, you're using your gut a little bit to try to determine um, your take on sentiment at a certain time. So I would say the more experience you get, yes, there is something uh, to trading from your gut, and you kind of can act on it more and more as you see these things over time. Um, but definitely a lot of data, definitely a lot of technicals, price action, things that you see right now, and then obviously fundamentals. So I would say for me, I definitely have used gut feelings before. I don't know. How about you guys?
Yeah, for me, I'm definitely more rules based. Like I try to minimize as much guessing as possible. Um, but I do combine with the technical chart, I will look at things like market sentiment and, like the media and like what I think the mass majority of people are thinking and doing.
Right.
And I'm always looking for pain points, right? Like what could cause people to capitulate or what could cause people to have FOMO and make emotionally driven decisions. But a lot of times those are represented on the chart. You can see the pain, you can see the inflection points, you can see the clear trends or the lack of a clear trend in the chart. So for the most part, I'm looking for rules based setups that I can back test and have a quantifiable edge. But again, that's not perfect either. History doesn't predict the future, but trade setups for me are kind of like fingerprints, right? Like they're not going to be exactly the same, but you can see similar patterns over time.
Yes.
So I used to be, when I was day trading like over 10 years ago, I used to be a lot more mechanical and like very much rules based or semi automated. Nowadays, I would say if I had to put a percentage on it, it's probably 80% rules based with 20% subjectivity. How about you, Travis?
Yeah, I tend to not let gut drive because, they're granted, like Nikki said, there is some pattern matching that you get over time, that you develop over time as an experienced investor. And I do think, some of that will sometimes help you. Maybe pattern matching is slightly different than gut feeling, or maybe it's the same thing. I don't know. But as a fundamental based investor, we have we we have a lot of data, obviously, from balance sheets, income statements, cash flow statements, company press releases, management, conferences. You can even buy things like credit card data, if you have the resources like at a hedge fund, right? So you can get a lot of data points, and you don't want to ignore that, right? But at the same time, there's also gaps in the data, so it is difficult. Like you're always going to have imperfect information, and like you said, also you're trying to project the future. So even with a great data set in front of you about what's going on now, it doesn't tell you necessarily what this company or this industry is going to look like a year or two or three out. So I guess rather than gut feelings, what I try to really rely on is probabilities and assessment of risk and reward.
Mm.
And so looking at a situation with the data I have and saying, okay, what do I think the upside is versus the downside? What do I think the current probabilities of that, that playing out in either direction are? And I'll use that. And so that helps me to deal with that imperfect information and the fact that we could be wrong. So I would say it's more of kind of taking calculated risks, using what we have available to us rather than like, oh, it feels like the stock's
Mhm.
going up
Yeah.
tomorrow.
Yeah.
That's a really good point. I think that when you're thinking about gut feelings and trading and investing, it's got to be backed by the data, right? And then if you have that plus that experience of something aligning or matching up in a certain way that's making you feel a certain way, like, oh, I think this aligns with what happened a few years ago and blah blah, then I think that's more so what I was talking about is the backdrop is the data. You're never like just making trades saying, "Oh, I have a feeling that this is gonna," yeah. There's always got to be something behind that.
GME is actually a perfect example of
Yeah.
that, where we identified it when it was at $4. The fundamentals, the existing data on the company didn't look particularly great. However, some of the data, if you looked at the balance sheet, it did tell you, if you knew how to read a balance sheet, that, hey, they do have a bit of runway. They're not going bankrupt next week. They've got enough assets and cash flow that they can probably at least survive for a couple of more years. And then the short interest was so high. And then we looked at previous situations where, there was a low float or high short interest to that extreme, like with Volkswagen in 2008 when it squeezed, 5x in one morning. And then we looked at that and we said, well, we think GME, despite, how bad the underlying fundamentals look, they've got a runway of liquidity. There's a really high short interest. What if we do see a situation, a squeeze kind of similar to Volkswagen? You're talking about a risk reward there of maybe 5-1. Of course, it ended up being even more than 5-1. But at the time, we thought, maybe this thing could get to $20 a share. And that's a trade you might take if you're looking for that type of setup, right? The 5-1 risk reward is pretty good, depending on the probabilities there, obviously. So that was one where we use kind of a combination of some intuition about what could happen based on history, combined with looking at the fundamentals and saying, well, maybe it's not quite as bad as the market is saying here. And in conjunction with the technicals, that was something that obviously played out in a very favorable direction.
Yeah. So I guess the lesson would be like for anybody that's thinking, hey, data driven or, gut feeling, ask yourself, what is that gut feeling based on? Right? If it's just like guessing or completely subjective with nothing to back it up, do you have an edge?
Right.
Or are you just gambling? Because there is a fine line in the markets between gambling and being reckless and treating it like a business or a job or a profession.